Let's take you to the UK now. The pound has tumbled to record lows against the US dollar today before recovering slightly. This comes in the wake of a package of tax cuts announced last Friday by the new Chancellor of the Exchequer. That's in other words the Minister of Finance, Kwasi Kwarteng. It included scrapping the top rate of income tax and slashing corporate taxes. The new Prime Minister Liz Truss's spending plans have also been limited. This move then saw investors dumping short-dated government bonds and taking other actions that have affected the British pound. Olly Barratt, our correspondent, our colleague here in London, joining us now on Today This Hour. Not a good day for the pound. What a reaction by the market to the announced new tax cuts by the new government of Liz Truss. It didn't take a few days at all. It was almost immediate. The pound getting a pounding, so to speak.
Absolutely. The pound got an absolute pounding from Friday onwards when Kwasi Kwarteng, the Chancellor, as you say, the Finance Minister, set out this package of tax cuts. Now, actually, today on the session, the pound has just turned back into positive territory against the US dollar. It's back up now at around $1.09. But bear in mind that over the course of the last year or so, the pound has lost around a fifth of its value against the US dollar. And the last few days really have been tumultuous in terms of trading. And there's a huge amount of speculation among international investors about where the pound may go next against the US dollar, and some investors today have been putting out predictions that it could end up losing parity with the US dollar by the end of the year. Of course, no one really knows the answer to that question. It's also worth saying that a lot of international currencies on today's trading have been down initially against the US dollar. The US dollar is very strong against the rand as well at the moment, and so there is part of that playing into all of this. But clearly investors were rattled by that package of tax cuts that the Chancellor set out on Friday, and those nerves have continued into this week.
Yeah, it's seemingly, what is the main reason driving this tax cuts? What is this new government hoping to achieve?
It's all about growth. UK Prime Minister, the new UK Prime Minister Liz Truss and her Finance Minister Kwasi Kwarteng say that they are taking steps which will lead to economic growth. And Liz Truss, when she was campaigning over the summer to become the next leader of the Conservative Party, told us that this is a type of thing that she was planning. She talked about the orthodoxy that's been in place, she says, in UK economic thinking for some time. And she says that taxes need to be lower, regulation needs to be lower, so that productivity can take a boost in the UK economy and economic growth can move on from a period of stagnation, really, over recent years. Now, the UK government position is that all of these tax cuts that were announced on Friday will eventually lead to higher growth, and therefore that will mean more revenues coming into the Exchequer, more money that can be spent on public services. And so over the long term, they say that this won't lead to huge amounts of long-term borrowing. But over the short term, they acknowledge that absolutely borrowing is going to spike to pay for these lost tax revenues that are going to be seen because of this tax-cutting programme. So it's deeply controversial. The UK government says it's responsible and will lead to higher GDP and therefore, over the longer term, higher revenues. But that's part of the reason that investors have been so spooked in recent days, is because in the very short term, it's going to lead to much higher levels of borrowing at a time when borrowing was already high because of the COVID pandemic, and at a time, of course, when the UK economy, like many others around the world, is dealing with inflation and a cost of living crisis.
Yeah, and the cost of living crisis hanging above all of us in the world, particularly in the UK as well. In this regard, has the Bank of England said anything? The speculation I've seen in other reports overnight, Olly, saying that the Bank of England might be forced to hold an emergency meeting of sorts in order to raise rates. But when the cost of living is so high already, I wonder what options they would have. Have they pronounced themselves at all, or are they still huddled somewhere quietly weighing up their options?
I think that's exactly the right description. Huddled somewhere quietly, weighing up the options and weighing up whether to as you say, release some kind of statement today or even an emergency move on interest rates. The Bank of England only hiked interest rates last week by 50 basis points up to 2.25%. But now, because of the moves that the UK government has taken and the impact on the currency, that is leading to speculation that the bank will have to go much further, much more quickly. But exactly as you say, the conundrum for the bank is what that means for mortgage payers and their costs, credit card holders and the costs of interest that they will be paying. That could lead to real financial pain for even more households if the bank does have to go ahead and raise interest rates further. But if the bank doesn't raise interest rates, that could mean further downward pressure on the pound, and that has its own inflationary effects as well. So in a sense, there are no palatable options for the Bank of England here, but there is that speculation that interest rates may rise significantly higher. And in fact, the markets today have been suggesting that they believe that interest rates here in the UK could be up around 6% as early as the beginning of next year, and that could mean, for example, for many mortgage payers, that their monthly mortgage bill, their repayments to their banks, could as much as double or even more. So that would be very difficult for households to deal with at a time when, as we've been discussing, they're already dealing with a cost of living crisis.
Thank you very much, Olly Barratt, for your time here today on eNCA and for that update from London on this day, how the markets have reacted to the tax cuts there with the pound, the currency of the UK, taking literally a pounding.